Hey everyone. Today we're going to break down the American market, take a look at a few instruments, and highlight the key points that I hope will help you make your trading decisions. Let's get started. And today we'll start with the Nasdaq. There have finally been some changes on the monthly chart. We need to draw new boundaries for the upward trend, and for now, only theoretically mark the upper level because this is a monthly chart and this bar will still be redrawn. As expected, the price started to get stopped at the 30,000 level. And in my opinion, right now, we're seeing the beginning of a correction to the previous upward movement. Now let's switch to the daily chart. Not much has changed here since the last review. The price is at the upper boundary of the upward channel, just a bit higher now after setting a new high. In other words, there was a manipulation, which I warned about in the previous review. Since the overall picture hasn't really changed, I'm keeping my graphical expectations in place. So for those who are holding shares in their portfolio, I'll repeat what I said earlier. I think it's a good idea to partially or fully lock in profits and wait out the correction. I expect the correction to end around $26,750 per share. Buying or adding more shares at the current level seems like a risky move to me. Yes, of course, the price could keep going up, just like it has before, but I think that possibility is minimal. Next, let's talk about Tesla shares. On the monthly chart, we're still moving within an upward trend. The stock continues to trade around $400 per share. The levels and trends from the previous review are still relevant. Based on the volume, everything points to the asset's price continuing to rise in the future. At the moment, buy-in doesn't dominate, but I also don't see any significant selling. The key barrier to further growth for the asset is the $490 per share level. If this level is broken, then I would consider $750 per share as the global target for the asset. Let's switch to the daily chart. In the previous review, I expected an upward movement to start from the $400 per share level and set a target for myself at $475. As we can see, the price really did start moving well, but there wasn't enough momentum and the price returned to the manipulation level. So far, there's nothing indicating a change in direction from upward to downward. Selling volumes are not dominating, so I'm keeping my chart expectations unchanged and continue to wait for the asset price to rise. So for those holding shares, I don't see anything critical at the moment. We keep holding. And for those thinking about buying and didn't do so at the $400 level, now is still a pretty good opportunity, even if it's not at such a great price. I consider the nearest local minimum as the point to cancel all purchases. If the price drops below that, most likely there will be a further decline down to the lower mark level of $340 per share. Next up are Nvidia shares and their monthly chart. The trends and levels remain relevant. Earlier, I highlighted the level around $240 per share, expecting a reaction from sellers at that point. And indeed, that level reversed the price. At the moment, it's quite difficult to determine how things will develop further, but considering the current data, such as the lack of buying volume and the price reversal below the level, I can only assume that the asset's price will continue to decline. It's quite possible that the price could drop all the way down to $170 per share. Now let's take a look at the daily chart. The target of $200 per share, which I mentioned earlier, has been almost reached despite the level. After this level, I expected the upward movement to continue, but as of today, new data has emerged. Selling volumes are increasing, and if buyers don't renew their efforts at the $200 level, I think the price decline will continue. Therefore, I think it's appropriate to update my chart expectations, since, in my opinion, both scenarios are possible. Either buyers will become more active and the price will continue to rise from the $200 per share level, or sellers will push the price down. In that case, I will be looking for new opportunities in the $170 to $175 per share range. So for those who are holding shares in their portfolio, I can't say anything particularly positive or negative at this point. The key level is the $200 price point. Basically, if buyers resume their inflows, everything will be great. But if they don't show up, we can expect a drop all the way down to $175. It will only make sense to buy more shares after we see confirmation of buyer strength at the $200 level. Next up is AMD stock and its monthly chart. The levels remain relevant. Since the last review, the price has continued to rise and has reached the $500 level. The $450 level was broken through, despite significant resistance from sellers. Congratulations to those who continued to hold their position. At the moment, the price has paused its upward movement. And now let's turn to the daily chart. In the previous review, I expected a correction to start, but the price kept rising. So far, nothing is stopping the price from reaching new highs. But we have to remember that any growth is accompanied by a correction. At the moment, I consider the $450 price to be the key level. If the price falls below that level, I will expect the correction to continue down to $360 per share. So I will adjust my chart expectations based on the new data. Therefore, for those who hold shares in their portfolio, pay attention to the price behavior. If the price reaches the $450 level, it's quite possible that it could drop below and continue falling. I don't recommend buying or adding more shares at the top. So that's roughly how I see things playing out. But if you think differently, let me know in the comments. And don't forget to like and subscribe to the channel so you don't miss future reviews. I hope this was really helpful. And don't forget, we make assumptions, but the market decides.